Market valuations, are they high? Are they stretched? I would say yes. We know that when you look at the market, which I do, on a forward-looking PE ratio, so price to earnings multiple, but forward-looking. We get PE ratios all the time from companies when they report earnings, but that is looking in the rearview mirror. That is their past quarter PE. I want to know what they're saying going forward. And we know when you look at the S&P 500 on a forward earnings basis, forward PE, it's about 23 times. Quite expensive, actually. However, if you look at the market and say to yourself, okay, what if we evaluated every company as the same weight? Not look at NVIDIA being a $4.5 trillion market cap, not Microsoft being, about a $4 trillion market cap, or Apple. We're going to take all the companies and we're going to give them the same market cap, same weight. What would the S&P be trading at? Well, the answer is about 18 times. So you can see how much things are skewed because of these large companies. And so I think you need to keep that in mind when you say the market's expensive. Yes, the general market is expensive, but if you use an equal weighted system and you said, well, let's take a look at every company if they were the same size, then market wouldn't be so expensive. I would say it'd be maybe fair value, maybe slightly cheap in some areas. Our first chart that we have here actually shows that the valuations, S&P 500 valuations at the highest level since 2021. And this is interesting because recently Jerome Powell, the Fed chair, said that the markets, in his opinion, were actually overvalued. We've heard this before from a number of Fed chairs, the head of the Fed, many times. Alan Greenspan, said it when he was the head of the Fed. And it was an interesting thing to look at this chart, and that's why we brought it to you. It seems like every time, and you see the lines there, every time the Fed seems to warn about stock valuations, stock market goes up even further, which is quite interesting and actually quite humorous. So whenever you hear the Fed tell you, well, stock markets is expensive, is that a time to buy? Is that a contrary indicator? Because in the past, it seems like that is how it's been. But let's look at our next chart, S&P 500 PE ratio, and you're going to see, other than that big spike that we had back in 2000, coming out of the financial crisis, you can see PEs are starting to climb, and they are starting to climb quite substantially. So yes, things are a lot more expensive. However, with any market, there are pockets of stocks that are expensive and stocks that are cheap, and you really have to know which ones are which. So I have a few ideas or a few examples. Let's show a chart of Tesla. Mentioned Tesla earlier in our show. Tesla today, and there's the stock, market cap, $1.5 trillion approximately. It's the most I've ever seen Tesla worth, and that has a lot to do with what Elon Musk has done recently. He bought a lot of shares recently, talked about his pay package recently, talked about robotics, etc. But Tesla trades at about 270 times forward earnings. Outrageous. So anybody who tells me, is Tesla a good buy? How can I possibly say yes? The only way you would buy it, in my opinion, is if you had some speculative money that you were okay to lose. If you lost it, that you could sort of dabble with a name like Tesla, because it is so expensive, so outrageous, yet the stock keeps going higher, as you see on this chart. Our next chart is Broadcom. Mentioned this earlier in the show as well. Now, Broadcom at the peak, or even now, their PE ratio or their forward PE is also very high. Broadcom trades at 50 times, more expensive than NVIDIA, more expensive than AMD, more expensive than a lot of chip makers. Broadcom is expensive at these levels. It's come down quite a bit, as you can see here, from its highs, but still very expensive on a price to earnings multiple. And our third chart, a name that many people have come to know, and maybe some of you own it, Palantir. Let's show a chart of Palantir. Palantir, there it is. Wow, what a beautiful chart. But everywhere along the way, this stock has been expensive and continues to be expensive. Palantir trades at 288 times forward earnings. Is this company ever going to grow into its earnings? I'm not sure, but it doesn't seem to stop people from buying the stock. So when people ask me, what about Palantir, Alan? Do you think it's going to go to 200, 250? It just might. But is it a good value? Is it a good quality name? Yes. At a good value price? No. And that's what keeps value investors, or even GARP, growth at a reasonable price investors, away from this name. On the flip side, let's go to a couple of names that are cheap. And we've talked about some of them in previous shows. First one we have, U.S. Bancorp. U.S. Bancorp, seventh largest bank in the United States, pays a 4.5% dividend. Stock trades at 11 times earnings. Would you want to own stock that is so cheap, cheaper than most other banks in the United States right now? Seventh largest, so it has staying power, super regional bank. I think you might. Another name that we have that, well, if you're considering, well, Alan, this is a bank, you are showing tech stocks. Let's show a tech stock. Let's show a couple of tech stocks. Let's show Google or Alphabet. Where does Alphabet trade right now? Look at that stock. Again, just slightly off its high, but Alphabet trades at 24 times earnings, well below Palantir, well below Tesla, and less than half of what something like Broadcom trades at. Meta trades slightly above that, maybe 27 times forward earnings. Another name that we have here is Qualcomm, a chip maker. They provide chips for pretty much all the phones that are out there. They provide chips for automobiles, very large company. Qualcomm, chip maker in that chip making space, 13 times earnings. Pay a bit of a dividend, not the biggest dividend, over 2%, in and around 2%. So these are names that I think you could get behind. These are names that I think are good value. So is the market overvalued? I think yes. In some places you can make that case. But there are a lot of things to buy today. And when investors email me or call me and say, I have some money to invest, do you think it's a good idea with the markets at all-time highs? The answer is yes, because not all investments are at all-time highs. Not all investments are overvalued or expensive. There is always something to buy. And it is my job every day to find those ideas for investors. And for those that don't have an investment advisor, it's your job to do your homework and do your research to find these good quality names, even in a market that, if you look at it in the broader sense or in general, is overvalued, or at least fairly valued at best.